My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. I'll be one of my friends. I'm just trying to help you make some money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Now, people are finally starting to realize that the Federal Reserve may be able to tame inflation. Suddenly, the endless haters want to climb on board the J-Powell bandwagon. That's how we got another good session. Dow gaining 240 points, S&P advancing 0.19%. NASDAQ edged down 0.19%, but it was down a lot more earlier. All day after the good numbers from Home Depot and Walmart, along with the slowing of housing starts, I heard these market sages talk about how it's possible Powell might really actually be able to navigate a soft landing. These were the critics who said it could never happen. What a bunch of obtuse thinkers! Where the heck have they been in the last 5 weeks? We just had a stunning rally based on all the things they're acting on now. And now they believe in a soft landing? Thanks for nothing. What did it take? Well, the peak in oil nearly $40 ago? Was that it? The incredible decline in rates? Maybe the decline in the averages in the bear market territory 2 months ago? Nope, it's the rebound that got them to come around. Thanks. Look, I don't blame anyone who now recognizes that inflation's peaked. Better late than never. But it rubs me the wrong way when these Johnny-come-latelys see Home Depot and Walmart deliver good numbers and then give you the all clear. Who needs that? What value is that? I can read those releases, too. Yes, these are two of the best retailers on earth. They both got it right. They easily could have gotten it wrong given the newly mercurial nature of the consumer, both of which they mentioned. What matters, though, is that they're price cutters, especially Walmart. In many ways, these are big box stories. They're laboratories of deflation. Aisle by aisle, they offer a lower-priced product that's just as good as the branded stuff, aisle by aisle. They're also selling more cheap food products. Walmart mentioned that hot dogs are selling over expensive steaks. And Walmart's big enough that they can actually hold the line on inflation and help the Fed. Yes, they are that big. Home Depot and Walmart talk about how the supply chain issues that bedeviled them, well, now they're lessening. They're still there, but they're lessening. They're still hurting the consumer, but less so. And that, too, is a good story. Home Depot sales got better as the quarter went on. It's called the cadence, giant leap in July. Those sales can be deflationary when they're do-it-yourself, DIY, because the DIY remodelers, rather than contractors, cost less. And if there was a lot of do-it-yourself this quarter, then it's big. Hey, by the way, tomorrow, the king of do-it-yourself, Lowe's reports. Let's see. But what matters the most, and what just shocks me, that these people refuse to recognize, is the peak in gasoline. It's all over these numbers. The price at the pump was strangling the life out of consumer spending. Now that gasoline's back below $4 a gallon, consumer spending can go higher again without causing ruinous inflation. Don't tell me that natural gas is still expensive. That's just an alibi for the people who got it wrong and set out last month's rally and are trying to make excuses. Of all the mistakes these know-it-all bears made, the worst was their inability to believe that oil could come down while Russia's still invading Ukraine. They bet the farm on the idea that no civilized nation would take Russian crude. Incredibly naive. They didn't think of China? Maybe, but they certainly didn't think of India. Yeah, see, they're getting in on the cheap at India, and they're not caring about what happens to Ukraine. Once that happened, the bears should have just switched directions because it meant gas prices were coming back down, and then consumers would indeed have that extra money. Remember, it's just a tax. Right? I mean, like if you're spending $5 per gallon instead of $4, well, that means there's $1 less that's going to Walmart or to Home Depot. Now, gasoline was the linchpin in getting inflation under control, and now it's going the Fed's way. Yet the people who believe in peak inflation seem to catch the most criticism. Yeah, I mean, like me, even as the evidence is crystal clear. Why? Because there's a huge number of hedge funds who got caught short or underinvested. So they desperately needed to talk down the market in order to do some buying. A lot of the rallies you've seen in the companies that are less profitable are short squeezes. Now, it is truly revelatory to go through the Home Depot and Walmart conference calls because they show you that while the consumer's gotten more cherry, she hasn't disappeared. And that is the true sign of a soft landing. You want the consumer to pull back, so retailers have an inventory glut. And then when you have an inventory glut, what do? They have to cut prices. Deflationary. And that's what's going to happen to Walmart with its excess inventory. On the conference call, they said it. That's great for Jay Powell. And according to Home Depot, you have the consumer doing more do-it-yourself work on the homes, also deflationary, because they're not paying up for professionals. At the same time, we now know that the work-from-home shift is alive and well. You can tell that from the ancillary plays like Williams-Sonoma, RH, Macy's, which rallied huge because the consumer isn't falling off a cliff. CNBC.com today ran a terrific story about how Apple's ordering people back to work. The most severe I've seen of this back-to-work group. But when you look at the fine print, it's only 3 days a week. So that is still all about staying home. Hey, let's refurbish that. It's for real. I think these stocks all have room to run. Oh, and when I ran my hedge fund, by the way, I demanded that you work 6 days a week. And I would throw a water bottle at you if you didn't play by the rules. Some called me old school. Yep, I like a lot of these beaten down retailers. But, oh, by the way, one I wouldn't chase is this Main Street bet thing called Bed Bath & Beyond. Because that thing's up more than 300% month to date after another big gain today, and the company desperately needs to raise money. Now, this is what I call a manufacturer short squeeze. A bunch of people get together and manipulate the stock up, but of course you're not allowed to really say that, but I just did. It can be self-fulfillingly positive, but only if CEO Sue Gove, she's the CEO of Bed Bath, convenes the board and agrees to sell 20 million shares in an offering, something that would assure her vendors that Bed Bath can pay for holiday merchandise. She can get a great price here because nearly 50% of the float is sold short, and these shorts are eager to buy so they can exit their positions at a loss. If she doesn't offer the stock, it means she can't read a balance sheet. Or maybe there's a hostage situation. This is just a slam dunk, of which I never use that term, to do a secondary offering here, and she should do it tonight or tomorrow, or else I question the company's viability. So what happens now? When we get this bulled up, as the hedge fund managers like to say, after an extended run like this, well, you know what happens to the market? I'll tell you what happens to the market. It tends to go down. The bandwagon's usually perilous for a bit when you jump on a month late, once so many medium and small-sized companies have already turned up. And we're starting to see lots of money-losing tech stocks starting to rally. You know what I say about those? Sell. For example, it's tough for the retailers to rally a second day on top of this one. Can tomorrow retailer numbers really be as good as today's? And every retailer stock went up. I don't think so. And I think that oil prices tend to bounce at $85, so I'd be a trader, if not a scalper, of the oil stocks here. Buy! But the main takeaway is that the people who got out when the averages were down 20% for the year, and the 10-year had shot to a 3.5% yield, and we were hearing constantly about $300 oil, now they're coming back in after months, 2 months worth of rally, especially from the June bottom. Now they're coming in. These fair-weather bulls who all believed we were headed for severe recession 2 months ago and were just calling Powell a dolt, are now rushing to declare a soft landing way too soon. Listen, I believe in the possibility of a soft landing, but the Fed still has a lot of work to do. For example, we had much weaker than expected housing starts this morning, but Home Depot swore up and down that there was no slowdown whatsoever in housing. We need rents to come down, too, and that's not happening. We have no relief whatsoever when it comes to wage inflation, and that's not going to be solved by people going back into the office. The Fed needs to see more outfits get squeezed to the point where they have to fire people. Sadly, it's true. Still, the bottom line is you never should have gotten off the Jay Powell bandwagon in the first place. And you know I've been saying that all along. I know it's been hard to stay the course. Strap yourself to the mast. But the people who didn't stay the course are now terrified because they missed out on a gigantic move and badly need another one to occur to get back in the performance game. All I can say to you is, why did you feel you had to sell in the first place? Let's go to Rashil in Arizona. Rashil!
Hey, Jim, how are you? What's your favorite cereal?
Cereal?
Yeah, cereal.
I like cereal. What, a stock?
Yeah, so do I. I got a lot of cereal on my mind. I'm long on General Mills stock.
Oh, General Mills. I was in the supermarket today. Not the way Dr. Oz was in with the crudité plate. I might have taken a pass on that. But actually in the cereal aisle, and I got to tell you, no discounts right there. None of that BOGO, which is buy one, get one. They are paying full price for the General Mills cereals, and I say Hoorah! All right. You never should have gotten off the J-Pal bandwagon. I told you a million times. You made fun of me. I didn't care. I was just like Carrie in that seminal Stephen King work. Ha ha! Oh, man, money today. With the market growing some legs, should you be in a shoe company called On Holding? No, not On Semiconductor, On Holding! I'm sitting down with company stock press. Then we're 2 months into this rally, so is it time to rethink your investing strategy? I'll give you my take. And Sonova fell today after Monster Run. So is today's pullback a buying opportunity? I'm talking to the CEO, so stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.